If you're running a business or you're an accountant, you know that a notice from the GST department can bring up a ton of questions. But for a long time, the most basic one was also the hardest to answer. Am I even talking to the right person? Well, a critical new government circular is here to solve that exact problem. And in this explainer, we're going to break down exactly how it works.
So here's our game plan. We'll start with the confusion that existed before, then introduce the solution, Circular 254. After that, we'll get right into the practical stuff. Who handles your specific tax case, the new rules for penalties, what happens in some of those trickier scenarios, and, most importantly, what this all really means for your business. Let's dive in.
For years, the GST system had some pretty big gray areas. When a notice was issued, it wasn't always clear if the officer sending it even had the right authority, especially when you looked at the amount of money involved. And this, of course, created a lot of confusion, delays, and just general uncertainty for businesses trying to do the right thing.
Just think about it for a second. You get a notice for 50 lakh rupees. Who's your point person? Is it a superintendent? An assistant commissioner? The problem was there was no clear rule book for assigning cases based on their value. And that ambiguity is exactly what this new circular is designed to fix once and for all.
And here is the fix. On October 27, 2023, the government issued Circular 254. You can think of this as the new official playbook. It assigns very specific roles to specific officers, bringing some much-needed order and predictability to the entire process.
Now, before we go any further, there's a key term we've got to understand: proper officer. This isn't just any government official. A proper officer is the specific person designated by law to handle a specific job, like issuing a notice. Honestly, the entire point of this circular is making sure the right proper officer gets assigned to the right case.
So, the circular brings clarity to two major areas. On one side, you've got Section 74A, which is all about the tax amount itself. Tax that wasn't paid or was short paid. On the other side, you have Section 122, which is about penalties for things like issuing fake invoices. The new rules cover both. So let's start with how tax cases are now handled.
All right, let's get into the nitty-gritty. Let's say you've got a tax demand under Section 74A. Who gets the file? Well, thanks to these new rules, it's now crystal clear. The easiest way to wrap your head around this new system is to just picture a financial ladder. It's a really simple idea. The bigger the tax demand, the higher up the ladder you go to a more senior officer. Okay, here's exactly how that ladder works. For demands up to 20 lakh rupees, a superintendent is in charge. If it's between 20 lakh and 2 crore, the case goes to a deputy or assistant commissioner. And for anything over 2 crore, it's handled by a senior additional or joint commissioner. Now, the crucial thing to remember here is that these limits are based on the combined total of CGST and IGST.
Okay, theory is great, but let's put this financial ladder to work in a real-world business scenario.
So imagine your business gets a notice. It says you owe 12 lakh in CGST and another 15 lakh in IGST. You add them up and the total demand comes out to 27 lakh rupees.
So who handles this case? Well, since the total is 27 lakh, which is more than 20 lakh but less than 2 crore, it falls squarely under the authority of a deputy or assistant commissioner. See? It's not the individual amounts that matter, it's that combined total. This one simple rule completely eliminates all the old guesswork.
Okay, so that covers tax demands. But what about penalties for other GST offenses, like, say, issuing fake invoices? Well, the circular sets up a very similar playbook for those situations as well.
Now, this table might give you a little déjà vu, and that's by design. The monetary limits are exactly the same. The key difference here, though, is that we are talking about the penalty amount itself, not the tax involved. It's the same ladder, just applied to penalties instead of tax. Here's a quick example of how that works. Let's say a business gets hit with a penalty of 8 lakh rupees under CGST. Since that's well under the 20 lakh mark, the case gets assigned to a superintendent. This makes sure that smaller cases are handled efficiently, which helps keep the whole system moving. Of course, not every case is straightforward. Sometimes things change, new information pops up. So what happens in these more complex, tricky scenarios? Well, the circular provides clear guidance for those too. Let's tackle a really common situation. An officer sends you a notice for a certain amount, but then for a later tax period, they find another issue and need to add to that demand. Does this change who's in charge of your case? The answer is yes,
and the system is designed to adapt. So for example, a superintendent might issue a notice for 9 lakh, which is well within their limit. But if a later statement adds another 15 lakh, the total demand jumps to 24 lakh. And because that's over the 20 lakh threshold, the case is automatically transferred up the ladder to a deputy commissioner. The assignment always follows the total value of the case.
The circular also has a smart rule for consistency. Let's say a case starts with a fraud allegation, but that gets overturned on appeal. The case doesn't get passed around to someone new. Instead, the very same officer who handled it from the start simply redetermines the tax under a non-fraud category. This is really important because it prevents delays and makes sure the officer who already knows the case history can see it through to the end.
So we've gone through the rules, the ladder, and the exceptions. Now let's just zoom out and focus on the big picture. Why do these changes actually matter to you and your business?
It really all boils down to 4 huge benefits. First, you get clarity. No more guessing who's in charge. Second, efficiency. The workload is distributed logically, which cuts down on delays for everyone. Third, you get predictability. You now know exactly how the process is supposed to work. And finally, you get consistency, because these same rules apply across both central and integrated GST.
And at the end of the day, as the circular itself says, the goal here is to promote optimal adjudication. This isn't just about shuffling papers. It's about building a fairer, more effective system for resolving tax matters, which is a better process for both the government and for taxpayers.
This circular is a major step forward, finally answering that big question of who handles a case. But that naturally leads to an even bigger question for the future. Now that this piece of the puzzle is finally in place, what is the next big step we need to take to truly simplify the GST journey for Indian businesses?